I'm Jeremy Kahn from Bloomberg News. I cover technology here in London, and we've got a really exciting set of panelists. Next to me is Boden, who is the founder and CEO of Starling Bank, which, if you don't know, is one of the challenger banks, one of the neobanks here in the UK, coming on really strong. We have Taavet Hinrikus, who is the co-founder and chairman of TransferWise. Again, if you guys are unfamiliar with TransferWise, it's a mobile app that allows you to send money across borders at very low cost, and is now one of the most successful fintech companies in Europe, I think valued most recently at $3.5 billion in a recent funding round. And then we have Maximilian Tayenthal, who's the co-founder and CFO at N26 Bank, which is based in Germany, but really has kind of pan-European ambitions and maybe even global ambitions. 2 million customers in 24 countries so far, including here in the UK, and valued at $2.7 billion in a recent funding round. Now, guys, a couple years ago, if we were having this discussion, I think all of the conversation would be about how you guys were going to bury the banks, destroy the traditional finance companies. It was all about disruption. Recently, I noticed a sort of shift in some of the rhetoric, and it seems less about disruption, more about there's a lot more talk about partnerships than there used to be. There's talk about how you're going to help traditional finance companies reach new customers. And what's going on here?
I think a lot of the words about partnerships are actually coming from the banks and the big incumbents. And I think it's worth sort of breaking down this sort of concept in a couple of phases. It's first of all that lots of platforms are coming out there, marketplaces, but the words about let's partner is definitely coming from the big banks. And that is because they are taking new fintech seriously. 3-4 years ago, when I started Starling, people never thought that people would actually switch, bank with new banks. The rhetoric now from the big boys in the UK is that we'd like to partner, we'd like to set up our innovation centres, we'd like to set up accelerators, and we'd like to visit you. Those relationships are sometimes very one-sided. And I speak from Starling's position, which is a bank, which is somewhat outside of this. But as somebody who's worked in big banks most of my career and done an entrepreneurial fintech startup that became Starling, I can see that this relationship is very one-sided. And we've seen a number of small fintechs fail as they've given up all their information and their IP to a big boy, and that big organization has gone on to prosper.
Taavet, TransferWise has done some partnering with some traditional or traditional banks. You've taken on the kind of money transfer function for some of these banks. What's your view on, are you going to bury these guys, or are you going to ultimately partner with them?
I think there are multiple ways to look at this. I mean, if you think about traditional world of finance, and it's really hard to build a differentiated product, and as such, it's very hard to build a brand. So therefore, many companies actually are forced to partner with banks because they have no way of going to market on their own. Now, if I look at it from TransferWise's point of view, we started out building a consumer offering, and then we extended this to small to medium business, and we have a customer base of 5 million right now on our own. And now we're realizing that what we're actually doing is we're an infrastructure company. So we're building infrastructure to move money around the world very quickly for a very low cost. And then it's natural we want to push as many payments through our pipes as possible. So therefore now we're going to banks and saying, hey guys, you have a really bad product that you're offering for a very high price. So if you're actually serious about doing something for your customers and offering the best product, you should offer them TransferWise. So it's kind of no wonder that the best ones are choosing to work with TransferWise. So number 26 works with TransferWise, Monzo works with TransferWise. We signed a partnership with BPCE, second biggest bank in France, 16 million customers, and a lot more in the pipeline.
All right, Maximilian, what's the view of N26 on this? Are you interested in? Are you obviously partnering with TransferWise, as Taavet just said? Are you interested in partnering with traditional financial players, or do you really just want to see these guys put out of business?
I think the process, like the transformation you're seeing in the financial service space, is disruption. Like it's a disruption driven by customer behavior, like that you've seen in many other industries before. It's like from offline People used to go to the bank branch, to online. People used to do online banking, to mobile. People used to do, like people are doing banking on the smartphone. If you look at all the industries, and that was also the starting point that started us on our journey, if you look at all the industries that have already been disrupted by new technologies, by internet, you can actually see that disruption has never been coming from the inside. It wasn't the incumbents that really changed the user experience. Like it wasn't the record companies that founded Spotify. It wasn't Blockbuster that founded Netflix. It wasn't the telecommunication operators that founded Skype, and so on, and so on, and so on. I think it won't be the big banks that really change the way how people do banking. Now, obviously, we try to be part of this disruption, and we are partnering with other fintechs that make sense. Actually, by chance, it's not only TransferWise we're working with, but we are also working together with Starling as part of our access to the UK payment schemes. There is like more collaboration than used to be in the past. I think it's also driven by a bunch of companies that were too weak in the B2C space and then did something in the B2B space, like for N26, partnering with banks at a broader level, like with traditional banks, seems to be hard to imagine.
Cool. I want to go to one of the polling questions, so I want you guys to get on the app. And the first polling question I have is sort of around this idea of, in 10 years' time, what's going to happen to the current crop of consumer-facing fintech companies? Are they going to end up, displacing the dominant banks of today? Are they going to end up getting crushed by the dominant banks of today? Will they exist primarily as kind of gateways to the services that are offered by traditional financial services companies? Or will they become essentially the service providers, but the traditional banks are still going to own the customer relationship? Or finally, are all these guys just going to get crushed by the Googles and Facebooks of the world as they get into financial services? What do people think? Wow, a lot of people are voting for the Facebook, Amazon, and Google. I guess it's hard to vote against those guys, but it's interesting. What do you guys think of the fact that you have the Facebooks, Googles, and Amazons of the world increasingly eyeing payments, increasingly eyeing money transfer? You have Facebook talking about a digital currency. Taavet, if Facebook comes up with a digital currency and you can send digital currency to somebody through Facebook Messenger or through WhatsApp, is that going to put TransferWise out of business?
Absolutely not. If anything, I think it's going to increase our business. Because if there are more currencies, that means people need to send money from one to the other. So we would love it. I find it unlikely that we're going to end up with one single currency in the world. So therefore, until we get to that point, there's going to be a lot for us to do. So I'm less worried about the Googles and Facebooks doing a lot in banking. And I think what we're going to see is that there will be a decent chunk of banking, 20, maybe 40% that will be owned by the tech companies, and then the rest will be the best of the existing banks who will actually be able to go through a disruption of themselves and come out the other end as a tech company.
Interesting. It looks like there was some late voting that I should have waited longer, but now it looks like most people in the audience think actually the fintechs will become kind of the primary portals through which you access financial services. I want to get you guys, Anne and Maximilian, in on this. What's your view on the fact that you have the big tech companies kind of eyeing this space? Is that a kind of yet another threat to the young fintechs out there that are starting?
I think the decision, the answer to this question, is more to do with the response of the incumbents than the activities of the actual fintechs. Let's try and analyze what the big banks, the incumbents, are doing at present. Number one, they're taking the new guys on the block very seriously. Secondly, they're trying to create, say, flanker brands or new, innovative brands that can move faster on the side. Some of those are, well, most of them are actually failing. It's very, very difficult to do that. But they will have to face up to a world where margins are lower. People like TransferWise have totally changed the price points for foreign exchange. And foreign exchange was a cash cow in the incumbent banks. So the response of the big banks to what's happening is what you have to analyze. And I think they will decide and will not be able to afford to be in all parts of the value chain. They will decide either to be distribution or to be the infrastructure or the pipes or provide some sort of vertical product line. I do not think they have the energy as an organization to transform themselves to an organization that has the breadth and depth of what they need to compete in this world. So I think we'll find some organizations saying there'll be conversations at the boards in where they'll say, okay, we cannot compete against Facebook and Amazon as a front end, a distribution, we'll get out of it. Or some will say, we don't want to do anything about foreign exchange any longer. And others will decide that they want to be the international pipes of this world. How that sorts itself out the decisions will be made in the next 2 years. The execution will take another 5 years. But I think we'll see a shakeout in the next 2 or 3 years.
Maximilian, how do you view this issue? And how do you view the potential threat from Facebook, Amazon, and Google getting into financial services?
Yeah, what you usually say, there's a lot of things, and it's true, there's a lot of things that keep me awake at night. Competition is not one of them in our industry. If I would do like a messenger app like WhatsApp or like a social media platform like Facebook, I would be thinking day and night about competition because you have super, super strong network effects. And obviously, if you have 3 friends that are like using WhatsApp, you will also end up using WhatsApp. I'm not worried about competition, neither of other challenger banks nor of technology companies. I think it's not a market where you can say the winner takes it all, and I don't see like 1 or 2 or 3 technology players really dominating the space. And then I don't see any of these companies really building a great product in a very highly regulated environment. And for me, it's also like looking at the banks. For me, it's about building up a company with 10 million customers or 50 million customers. And I know there's a transition of customers, like there's hundreds of millions or probably billions of customers are potentially on the market that are paying, for example, for branch networks they're not using anymore, while like traditional banks are still heavily investing there. So there might be other challenges that also take a share of the market. There might be a technology company, one of the more like traditional players like Facebook, Amazon, that take a chunk of the market. But in generally, I don't see it as a big threat to my own company or to our space.
Interesting. Some of you have talked about what the big banks are doing. One of the things we know they're doing is spending a ton of money right now. And I think we have a slide that shows sort of what the global tech spend is by some of the largest banks in the world. This is what they're spending on kind of IT and digital services and digital transformation. And this is in some case, the next, I think this is annual actually. And you can see it dwarfs the amount of venture capital that's been put into sort of all of fintech in Europe last year. But it sounds like you guys aren't particularly worried about this spend, that this doesn't concern you. Taavet?
I mean, what strikes me when I look at this is that if JP Morgan is spending 11 billion on technology, they need to charge people 20 billion to make up for it. So,
yeah.
Go figure.
Right.
Yeah, but if you look at those numbers, I used to run big technology shops running, with $1 billion plus budgets, and something like 80% plus, even 90% was going into mandatory changes, regulatory changes, upgrading systems, and only a tiny percentage going into new innovation. I spent 35 years in that world working for those sorts of companies, sometimes the biggest banks in the whole world. And I came to the conclusion I couldn't fix the old system. I had to quit and start a new bank. It is very, very difficult to change these in these organizations. It's full of very, very smart people, huge budgets, and they understand the problem. Just the problem is very difficult to fix.
Interesting. And you make the point that the existing banks have this huge cost base that they have to somehow try to maintain even as they're moving into these areas, and you don't have that. You don't have branches, you don't have the same legacy costs, you don't have the same tech overhead and tech debt that some of these companies have.
Yeah, and I think that, sort of some of the tech debt in these big companies I wrote,
right.
And some of it was done 35 years ago. So what we have is the opportunity to start again. And I do not think some of these incumbents, some of these big banks, have the organizational energy to transform themselves. I think big decisions are going to be taken to exit certain businesses. And they may plug in one of us in some sort of functional role in providing that whole solution. But what they're doing at the moment is taking those organizations and transforming them is too difficult. A lot of them are actually starting flanker brands. But if you note, JP Morgan had Fin, and Fin was scrapped last week.
Interesting.
Yeah,
Max.
Perhaps two points to add to that. I think looking at these figures, it's actually always surprising to see how little is arriving at the customer. I think like most of that is like being spent on new compliance system, like some on the back end. I think very little of that is actually perceived by the customer as like better user experience or like a better designed product. And the other point is, I think if you would have looked like 1995, like what was the venture capital that Amazon has raised, and then you looked at the $3 billion of yearly like revenue of Barnes and Nobles, you would have also like thought like Amazon is about to fail. If you would have looked at all the travel agencies, like how much budget they have, how much spending they have, how much they can invest in marketing, and if you would have looked at Booking, you would have also not have believed or predicted that Booking is going to entirely disrupt that market.
That's a good point. I want to go to another polling question. There's lots of innovations coming out sort of in the financial services space, and lots of different kinds of innovations. When we talk about innovation, that can mean a lot of different things. So the next question is, which innovation will prove the most transformative? Is it going to be blockchain? Is it going to be digital currencies? Is it going to be open banking, which is, of course, a kind of regulatory innovation? Or is it going to be AI? I'm just kind of curious and I know we're deliberately comparing kind of apples and oranges there, but I'm kind of curious what the audience thinks on this one. Give people a second to vote. It's kind of going all over the place. So it's interesting. There's a strong contingent for open banking, and that's good because I want to ask about open banking. How important is open banking to what you're trying to achieve, Anne?
Not a lot.
Not a lot. Oh, that's interesting.
That's okay. I think that open banking is the implementation in the UK of Payment Service Directive 2, which allows organisations to plug and play together using the API economy. I really, really believe in the power of APIs. And us at Starling have been front-running our API strategy since the very beginning. And you can do everything at Starling through our platform business through an API. Open banking is the implementation of that in the UK. At the moment, all the banks are being mandated, well, the CMA 9 mandated to use it. But it is very, very clunky. And it is not because the big banks aren't trying to use it properly. It is very difficult to implement. And I think that it is slow. It's taken a long time to get there. I think there's going to be another 5 years before the true power of open banking will be realized. Okay. In the meantime, people like ourselves are using APIs to provide that services to other organizations, people like N26. So we believe in open APIs. We believe in open banking. It's just not there yet.
Right. Maximilian, what's your view on this?
Yeah, I would actually also agree with the audience. I think open banking is going, like we talked a little bit about disruption in the financial service space. I think like this kind of like decoupling like from the front end to the back end is going to like fasten this trend, because it gives new players basically the chance to become the layer between like the closest to the customer. Basically, it gives us the opportunity to be the place where the customer takes the next financial decision. We're a growing company. It also gives us the chance to provide us like a more smooth transition from the customer, from the traditional bank to N26. It also helps us to do better credit scoring using the credit history of the customer. I think in terms of artificial intelligence, like super important in terms of tailoring the product much more to the customer. If you think about Facebook, I think you have 1,000 different versions of Facebook. Like if you're using Facebook, I would see a different front end than you. And I think the same should be true in banking. I think you should really tailor the front end, should learn about the customer, and should apply or should provide the best the perfect interface for the customer. The customer is always like, using credit, you shouldn't show them like investment products. If someone has invested a lot of money, you shouldn't like try to cross-sell them like credit product, plus obviously credit scoring. I think both trends will play an enormous role in the transition of the financial sector.
Taavet, open banking important for TransferWise or not so much?
So actually, I think the most important innovation is missing from this chart.
Okay, that's good.
And that's transparency. So kind of the reason myself and my co-founder Christo started TransferWise was that we were really unhappy seeing that banks have a hidden markup on the exchange rate. So when we were starting, it turned out banks are charging 5%, 6%, 7% on top of the exchange rate. So we've been working really hard to change that and to make it sure that people know what they're paying for. So part of what we achieved is that last year, the European Commission passed a law that in Europe, financial institutions have to show the markup on the exchange rate. So I think that's the most important thing, and that's what's actually going to turn the business model on its head mostly. I mean, the progress is pretty massive. Like on the way here, I was checking the Barclays app, and you can see in the Barclays app now they're showing 2.75% markup. That's one of the few big banks doing it. Number 26 is using TransferWise, so their customers are getting a great deal and know what they're paying for. I don't know what's the case with Starling, and many other neobanks actually are still screwing their customers by giving them a bogus markup rate. So I think the transparency thing is the most important and will have the most profound impact on the business models.
Interesting. Max, when you were talking earlier, you mentioned briefly, a lot of the big banks are spending a lot on compliance. Well, there's a kind of a reason for that, and they have the rules they have to apply, and these are big challenges. N26 recently, as you guys were called on the carpet by the German regulator that said, you needed to spend more on compliance, you needed to show them that your controls were in place. The Bank of England just today, came out with a statement saying they were concerned about some of the governance procedures at all of what they call fast-growing financial institutions. How big a challenge is compliance for you guys? And is compliance kind of the Achilles heel here for your business models? Because, ultimately, I know you're trying to do a lot of this with technology, but you're going to need to get people in to look at suspicious accounts, to do know your customer, to do AML. Max, what's going on with compliance?
I think, like in our industry, there's like a trade-off between user experience on the one hand side and compliance on the other side, or between security and speed. Like thinking about like if you as a customer, if I ask you for like 3 different pins in order to authorize a transaction, this is obviously like a very safe way to authorize a transaction, but the user experience is obviously very poor. I think we, from like as player in the challenger space, one need to understand that compliance obviously like is you have to adhere to compliance. Basically, it's the rules of the game defined by the government, and you can never go below like 100% compliance. I think if you look at the challenger banks, some of the competitive advantage is coming from regulatory arbitrage in a way, that we might be 100% compliant and like a traditional bank is 150% compliant. But I think we and also the other challengers, I think being governed like by various regulations in different countries, we work very closely together with the regulator, and we fully understand that adhering to all applicable laws is obviously like it's the baseline. So if you lose money of the customer, if you're not compliant, if you lose data of the customer, you can just go home and do something else. Like no one will care about your user experience.
Yeah, and
can I say that sort of new banks, especially in the UK, are held to the highest possible standards, and I don't think the standards are not lowered in any shape or form for new entities. I think the difference is, and I speak from my experience of working in big banks for many, many years, new banks are more efficient because everybody takes the time and effort to actually understand the rules. It's surprising how many people in some of the banks we talked about earlier on are actually getting that information third hand and applying the rules incorrectly and are actually doing a bad job. When you have more and more people, it doesn't mean you do a better and better job. I think that starting from scratch and doing things in a new way and having an organization that has a mission to do things properly, you can end up with very, very good compliance, very good governance, and it's cost you less. I think that many large institutions have lost their way when it comes to compliance. And I'm very, very proud to work in the fintech sector, and many of us are doing an excellent job. And, you know, and we have to say that and prepared to defend ourselves.
Right. I want to take a question from the audience before we run out of time. Andy Kraft is in the audience, asked, will the challengers be able to move up to grab enterprise customers with their more complex needs? Taavet, you guys already started doing a little bit of this. You're offering small business accounts, multi-currency accounts to business. Can you talk a little bit about your plans in the sort of enterprise space, and are you hoping to kind of move up to do more to address business customers?
So I think it's always a journey of kind of moving, start with consumers, go into small to medium business, and then kind of see how far you can go. You know, if I think about a Fortune 100 enterprise, you know, so actually it's a very different business to what we're doing. So I'm not even sure we're ever going to get there, but if you think about the market up to that, there's actually a very long way you can go. So start with consumer, build our infrastructure. Now, you know, we have the borderless account, which businesses are using for international banking. You know, as these customers are growing, you know, today it's a 10-person company, tomorrow it's going to be a 100-person. A few years it'll be a 1,000-person company. So I'm sure we can offer our service quite a long ways there, but it's critical to realize that if you start from the other end, you know, you might not always match in the middle, but there's a long way one can go.
Maximilian, are you guys interested in moving to business customers and business lending, or are you primarily focused on the consumer?
I think for us, it's most important to really like provide the best user experience to our private clients, and like we have very limited resources as a rather young company, and every like going like to different verticals is actually means a distraction. But having said that, you know, we have the bank license, reporting to the regulator, an issuing license, process integration. We've built all of that, and there is a thought around leveraging that like across different verticals in the future. But for the time being, it's more about internationalization and really bring our product to more and more countries.
Yeah, Anne, how about you? Actually, you know, remember the audience just asked a question about a grant that you guys got in February to build out an SME kind of proposition. What's happening with that? Can you give us a status update?
Yeah, well, the Capability and Innovation Fund was a fund that's set up in order to give big grants to banks that could have a chance of taking big market share away from incumbents. And Starling was awarded £100 million a couple of months ago to build, well, hopefully the best SME bank in the world. So we currently taking all the things we've learned from building a retail bank and providing that infrastructure to governments and big banks already, and extending that into the SME space. The SME space doesn't have many new players and is largely concentrated in something like 4 or 5 big banks. So that's our next target, alongside sort of expanding across Europe.
Great. I'm afraid we're out of time, so I want to thank our panelists for being with us today, and thank all of you for listening. Yeah, give them a round of applause, please.